New all-time highs in the market. We opened up this morning and shot right above the 600 level right at the open before retracing all the way back down to the 595 level and then bouncing back up into the 598. And that's right where we closed today. We are in positive gamma exposure territory, and this is often what we'll see here when we enter into these dealer cluster zones. A poke into the zone, followed by a rejection as dealer selling pressure comes in. Dealers are selling shares of the underlying security in order to hedge their option positions. We saw that multiple times earlier in November as we came into this dealer cluster zone right around the 600 level. When we take a look here at our GEX data, those are the purple horizontal bars that you see here in this column. The largest GEX is at 598, and this is mostly 0 DTE gamma exposure that is rolling off today. That is why that is such a large level. But if you just take a step back and remove that data from the chart, you can see that 600 is the next largest level. This has been our main target for a number of weeks. And of course, we tagged that level this morning. And let's just look a little bit further up the chart here. You can see we still have gamma exposure growing at these higher strikes. The 605, 610, and 615 have formed a pretty nice base and are continuing to grow. So those are levels that we are watching, especially if we can get some consolidation and footing here above the 600 level. If we do see that take place in the next week or so, I believe these higher levels will be the next target.
Thanks, Anthony. I'm going to briefly go over the VIX. Last Thursday in our newsletter, we mentioned that the VIX looked like it might be on a pathway to tag the 14.5 level. And just today, we did see the VIX hit this 14.5 area. So this 14.5 does match up with this lower Keltner channel, roughly, 14.4. And as you can see, if you look back, the level of the VIX does tend to respect this 2-hour Keltner. You see these long wicks every time it exceeded it. And the declines also tended to stop when we got to the bottom of that channel. So I know we're seeing a picture that does point to higher prices for the market through the end of the year. I'm wondering if the VIX might stage a rebound here. So looking at our VIX GEX levels chart, this is today's action. We're basically right at this big dealer cluster area around 1524 is where the VIX closed. But look at the volume today. We had huge volume at 20. It was the highest volume of any strike on the VIX. It is possible that with the VIX being at the bottom of the 2-hour Keltner and seeing the volume here at these higher strikes, it's not a stretch to believe that we might see a market pullback from here, which has already seemingly started from 6,000 while the volatility rebounds.
Thanks, Sean. Let's take a look at IWM. IWM getting above the 242 level today, closing out. We actually got all the way up to 245. This is the highest price we have seen since going back to 2021. So really huge move for IWM and small caps. Taking a look at the gamma exposure picture. Let's just zoom into the chart here. And we can see we're in our dealer cluster zone. So a little bit of hesitation or pause. We've gotten above the largest gamma exposure concentration, which is at the 240 strike. But look at this 250 strike. Net positive GEX is growing very strongly and is about to overtake this 240 strike. So this is going to cause our dealer cluster to move higher once that takes place, most likely tomorrow if we see any kind of continuation of this move. We'll have our dealer cluster up at the 250. I expect some consolidation before another leg higher. I also wouldn't be surprised to see a little bit of a gap fill down here back to the 240 level before a bounce. But all in all, still within just a few dollars range here before moving higher. We always like to take a look at the volume as well. Volume coming in nearly 100,000 contracts traded at the 250 strike, very significant volume. So while the rest of the indices are mostly flat on the day, small caps continuing to outperform for the last several trading sessions, and it's not surprising based on the gamma exposure data.
Let's look at Meta, a name we've covered quite a few times. Looking at the chart today, we actually ended up getting back above this whole moving average at 558.91. I consider that a positive. We did retest this middle Keltner channel. I put a little bit less weight on the middle Keltner than I do the whole moving average, but it's still notable that we did reject off of that and basically just kind of printed this candle that seems to lack decisiveness, even though it's green candles. Let's take a look at the gamma picture, which is kind of interesting. We still have this big gamma cluster at 600 and a lot of volume there to go along with it. I'm actually looking at 580, and I'll tell you why, just short term. So we'll scroll down and take a look at our total gamma exposure. We all see the 600 there, okay, and we see that 580 is basically the second largest positive GEX cluster. But if we look at the 3D chart, I'm looking at basically a lot of this positive gamma for this Friday, which I believe is a half day trading. 570 and 580 are pretty big concentrations there. So we have these negative clusters, but they're not as significant. I'm going to give positive gamma and the potential of 580 the edge here on Meta.
Let's take a look at Snow real quick. Snow had earnings last week and had a really nice run up, now forming a pennant, a bull pennant or bull flag here. A breakout above this could take it into our upper dealer cluster zone, which currently is sitting at the 180 strike, and that is the largest gamma exposure concentration. A lot of volume still coming in at this level, 30,000 contracts, pretty significant for Snow. And had another really strong positive day of 2.6%. So I think it's just a matter of time once this consolidation is completed here in this bullish pennant formation that we could see a move up into the 180 and possibly the 185 level. So I'm targeting a move in between that zone into December.
All right, Anthony. The last one I wanted to draw attention to today is USO. I've got this gamma exposure dashboard pulled up with our data graph, and you can see basically oil, which has been somewhat weak lately. It's dropped right into this 72 gamma cluster, which when you see a big gamma cluster, we look at those as potential support or resistance areas and potentially, kind of a pivotal point where, okay, if we did get much below this, I would want to see these lower strikes increasing to start looking for lower prices. But it also means that this is probably some sort of a wall, at least for the time being. And of course, this 79 strike is very prominent here. And we go over to the chart, we can see that it basically tried to get below this whole moving average and ended up staying above it for the close, even though it's a red candle. So as long as we're above 72, and I think that's kind of my line in the sand, as long as we're above 72, I think we have a pretty good shot at reaching the 79 target that we saw on the gamma dashboard. A lot of things happening in the world that don't make this a difficult idea to understand, as far as why oil might go up. So definitely watching oil.
Thanks, Sean. Next, I want to take a look at Coinbase. Coinbase trading just above the 300 level has been really consolidating between basically around the 285 to the 310 level, right in this zone. Had the huge rally off of the election. The Trump administration is supposedly going to be very pro-crypto. We'll see how that turns out. But again, this is another very bullish pattern, both technically as well as on the gamma exposure data. You can see the largest concentration is here at the 320 strike, and we've got big volume coming in, relatively big for Coinbase as far as Coinbase's options market goes. We've got nearly 10,000 contracts being traded at the 350 strike and over 7,000 contracts traded at the 400 strike. So these are very bullish moves, both from a volume standpoint and from a gamma exposure standpoint. I can see some further consolidation around this 320 level. And if any momentum comes in above that, we could start seeing gamma exposure grow at some of these higher strikes, especially with the amount of volume that's continuing to come in every single day at these higher levels. So that's something on our watch list. I do think coin fundamentally is not justified at these levels, but from technical and gamma exposure perspective, there is the potential for higher prices to go, at least in the coming weeks. That's what we're seeing in the data. And if you guys want access to our gamma exposure data and our option flow analytics, head on over to geeksoffinance.com. We're currently running a Black Friday special on our yearly portfolio manager tier subscription, so definitely check that out when you get a chance. I'll also put a link to our community Discord. We've got a ton of great traders discussing their portfolios, their trade ideas, and market analysis every single day. So be sure to take a look at that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.